people buy from people. People want to meet people, and people are inspired by people. Once you define your utility, the community will come. You have 6 basic human needs: energy, food, water, infrastructure, healthcare, and education. I leave alcohol and sex to the side. These are 6 which I'm willing to put money in. You could launch a token and you could make 30, 40, 50x. And literally, if you have that kind of returns, you have no incentive to come back the next day and sit on the same desk. All the major studios in the world, whether it's the Disneys, the Paramount, they're scared of Web3 because they're centralized. I will use AI to produce the content, not to create it. You just go through history, go through every country in the world. It's all humans. The humans have left the legacy, not the AI.
Hello, welcome to Bitget Show. I'm your host, Vugar Usi, and today we have 53-year-old gold. Right? That was the right, Manoj?
Absolutely. Thank you.
Welcome to the studio. Thanks for having it. And we already had this very interesting chat, off record. And I want to bring it to, because I think we were touching very interesting topics and you work into like art and creative. And I recently had this chat with an AI professor, and he was telling before we used to, people used to go to concerts and opera houses to listen to music, and now it's in our fingertips on our phones, like Spotify's and so on. And actually going to concerts becomes a luxury, and we saw this a Taylor Swift hype where you can't put your hand to any ticket. It becomes a true luxury. What do you think with the technology and all these things evolving around are a day-to-day things becoming a luxury?
So I think one thing that's very interesting, I saw a couple of days ago that the Zoom CEO said that get used to having your digital avatar attend a Zoom meeting. So that made me think about why I'm sitting here today. We are having a human-to-human interaction. So if I sent a digital avatar to come to speak with you, I'm not sure what kind of content, quality of content, authenticity would convey to your audience. And I think when I look at the fact that why do I insist on having a human-to-human interaction, whether I'm B2B or B2C, at the end of the day, people buy from people. People want to meet people, and people are inspired by people. So I take a step back. I get inspired when I see phenomenal technology, but I don't even use the word artificial intelligence. I call it augmented intelligence, because without the human, there would be no intelligence. It's the human who trained that piece of software to become smart, right? So I agree with you that there is going to be an exclusivity factor in having a human experience. I crave that. I like to meet people. I get energized by people. And the more people I meet leads to the network's effect, which is I feed off the energy of the people that I'm sitting with. So I'm trying to think, would I go to a concert to watch a computer screen sing to me? I don't think so, right? I go to listen to the energy of the singer and the energy of the entire audience in that room. So that's something which I always think about.
I always say no matter how big your TV is, it never can put you into the stadium to watch a football game, right? Because
100%.
Even that, I always have this conversation with my parents, and with this Olympic Games coming, and I was telling I really want to go and attend an opening ceremony, and my parents were no, you usually have the best experience, especially now it's in France, it will be across the river, you won't get. And I'm but it's being present
100%.
is.
100%.
It is part of the thing. But also in crypto, we see so many projects that there's no human face behind. Even the founders have an avatars, and people are still investing.
So I'm seeing a little bit of a shift now. I had a very interesting meeting yesterday with one of our portfolio companies. There's a company, it's called BSGG. It's an interesting online gaming community. And effectively, what has been impressive to me is, sure, they're an online sports betting platform, but what is interesting is They focus on the fundamentals, which is cash flow, profit, the old school things that people don't even think about today, right? And when you and I had our conversation last time, we spoke about the fact that the crypto world actually does it in reverse order. You raise the money first, you already have raised all the money, and whether you decide to build or not, the money is already in the bank. So therefore, your incentive to go and build and deliver is actually very low. All right. Whereas in the traditional world, you build something, put together a plan, bootstrap it for some time, and hopefully you raise the seed round, series A, B, C, and then you go and create a product, and then you take it on a path to commercial viability, right? So I'm still very old school. I love the words cash flow. I love the words profit. I like to see audited accounts. I like to meet the people. I want to know who's behind a company. And if someone shows me a JPEG, and this is who they are, guess what? You will lose me pretty fast.
That's cool that you mentioned that, because recently I was also talking to a founder and they were so excited about this, like a quick, small lock periods. And if you can exit, you can do amount of X. And I was like, what's your runway? And these people didn't know what runway is. And they had no plan what they're going to do with the money they're raising.
Sure.
And I'm like, how you can operate this? And I'm like, you should know what your runway is and how it
100%.
Corresponds with your lock periods
100%.
and how you gonna build something in 6 months that created demand that no one dumps your token. Like sometimes I believe the industry is so fast and exciting that people don't think. They just kind of take the money now and then decide what you're gonna do with it, other than actually building a solution. And in this bull run, we see so much rise of the meme tokens that no utility, no project. It's literally like a lottery ticket on a chain.
So you have what I call, there's a phrase that I use, right? And you either learn or you earn. All right. So you're absolutely correct. We've seen a lot of the meme token has taken over parts of the sophisticated asset class by storm. All right. But then I take a step back. Today we spoke earlier about the pump and the dump times that we have seen. All right. And today what's happening is, if the fundamentals are not there, then you're not investing, you're actually gambling. All right. But if you have a value proposition which you can articulate, then I think it's something which you should see and go through. And as you said it correctly, the words like runway, like cash flow, head count, simple things that we consider simple, or I do. It's something simple, meaning it's something that I want to understand before I sit with any team and look at them. But what is interesting now, many of the current projects that are in the Web3 space don't have that runway of transparency. And as you said correctly, they're more interested in raising the funds versus what to do with the funds after they have been raised. So there's a disconnect still going on, a little bit less now, I think. But the thing today, the Web3 community is growing. And I think once you define your utility, the community will come there. So I'm seeing a little bit smarter investor pool today than we did in the first run.
Like, what is your take on, like, as we are talking about like a investor's perspective, and you have like a portfolio companies, like, don't you think like difference between like a traditional VCs and investors versus Web3 investors? Like, at least my observation in a recent bull run was that Web3 investors, they took the similar narrative to like a retail investors and angel investors. They're not here for a longer run. And in traditional startup ecosystem, there are VCs that would invest for 10 years without, exiting, or one VC exits to another. While in Web3, everyone thinks very cyclic. Mm-hmm. And I've seen so many VCs, they want a very short cliffs and lock periods, and everyone's justification is that, we've been burned last cycle. When cliff came, we couldn't exit because market was down. We want to be able to in and out within one bull run.
So I think you have to take a step back, go to the fundamentals of Web3, right? Bitcoin is one of the foundations of Web3, okay? And I recently joined Marathon Digital Holdings, which is one of the world's largest Bitcoin miners. And the approach there has been, they have recently gone from asset light to asset heavy. They managed to go through the ups and downs of the recent industry. And the reason they were able to do that is because the chairman, Fred Thiel, the CFO, Salman Khan, applied a very strict financial discipline. What's interesting is that when I go back and look at, so in every industry, forget the timing, right? You're always going to have some bad players. They should not define the entire industry. So yes, we had some very funny players on FTX, Celsius. I mean, they're in every industry has it. It's not exclusive to this industry, right? But you also have some great players. Some people who were, okay, we're going to focus on a certain sector. We're going to build a proper business. I saw a lot of discipline in Marathon Digital Holdings, one of the world's largest Bitcoin miners, who are effectively transforming themselves from being Bitcoin mining into my traditional background, energy and infrastructure. So they were able to take a very powerful narrative, which is, okay, we are mining Bitcoin, but we're also an energy technology solution company. And because they're financially disciplined, they're able to attract the true Bitcoin believers, at the same time realizing that yes, Bitcoin production or Bitcoin mining consumes a lot of power. But as we shift it to renewable power and other sustainable sources of power, you now have an ESG solution. So if you think about it, the evolution not only of the narrative, but the evolution of the industry attracts a wider audience. And that comes because of financial discipline. And then at the same time, it's a commodity. I mean, since we've had the last crash, BlackRock has come in. Their ETFs have gone through the roof. What they have achieved in terms of what their ETF has, gold took 20 years. Just think about that. So the smart capital has now realized you need to have some allocation to Bitcoin in your portfolio. This is a commodity that's here to stay. It's limited at 21 million. Everybody knows that. And there's a level of sophistication now that I'm seeing, which was not there during the first run. Make sense?
It does. And also, like, I'm really surprised to see, like, because in the beginning it was like also a bit skepticism that there's like all these Ethereums and like new technology, Bitcoin is old, but like with ordinals and now the things you can stake Bitcoin, you can do so many things. It became a true financial investment vehicle.
Absolutely.
And there's a lot of money coming in, and it totally changed the whole narrative of that, what it is. And today I believe that we became in the world where Bitcoin has its own journey.
Sure.
And also this bull run, we saw that that journey doesn't much influence, because in previous bull runs, we saw that Bitcoin goes up and then everything kind of follows. We don't see it today. Today, we see that people are focusing, okay, this project is going up or not going up because what they're doing or what they are not doing or they're supposed to do or how they're competing.
Absolutely.
In the market.
And I think you will continue to see a level of sophistication now, because you suddenly have, I mean, take into account a global bank like Standard Chartered Bank. They have now set up digital custody. So when you have centralized financial institutions looking at holding digital assets for their clients, it's showing you, I don't want to say a shift, it's an expansion of the mindset, right? And if they're able to go out there and pass through their own internal compliance and get behind the fact that this is a digital asset, which is going to increase in value. And if their clients are in the mining space, then guess what? They're going to provide a service. And as you said correctly, but in this case, what's going to happen is you'll see a level of sophistication, which is there now, people are being a little bit more cautious, because at the same time, you're also going to be very thorough in your process to make sure that you're not over leveraging yourself. So you're here to stay. And as the industry evolves, we've just seen a recent Bitcoin halving. It's going to come again in the next 4 years, but then the transactions are going to kick in as well, right? So it's about timing it and watching it all happen, but watching the adoption grow to a much larger scale. That's how we see it.
I believe, yes, adoption should be and will be the next driver, especially like next bull runs will be about adoption, because now finally it's a time to go bigger and bigger. Absolutely. And I saw like more people joining. Even at Bitget side, we see how much like new joiners are there. People actually coming and interested. Yes, some come to gamble, some come to for various reasons.
Whatever.
But whatever, I think it's a kind of a learning curve, learning jump, and we saw more and more people joining. But I want to discuss that very important thing you just mentioned about being here for a longer run and having that vision. While so far, even within the like a big players of an industry, it was very cyclic. And I can even give an example of one of our biggest competitors that at some point in the next bull run, they were like around like 8,000 team members. Today, they're like back to 4,000. And we see that even large players in the market, they are very cyclic. They just go up and go down, and not only about investment and investment appetite, but it's also about like how they manage talent, what they build, how faster they go, or how visionary they are. Why we can't just, or why most of the players can't just, do that, or it is more about how we can make more money, and that when.
So I think when you go back and look at the traditional world of finance, right? You have a bull and a bear cycle. So during a bull cycle, all the investment banks are hiring, whether it's, equity or debt, trading divisions. There's a lot of activity. M&A is at a peak. And then suddenly you will go through a bear market. And you'll see a shift in the human resource. So if you take a step back, it's exactly the same thing happening here, right? I think there is a lot of, at the end of the day, there is a lot of hype associated with the first bull run, which we saw. And when we saw the crash, it happened pretty fast as well, right? And I think there's been a recalibration now. There is a level of, I'm going to use the word common sense, that has kicked in now. Because back in those days, you could launch a token and you could make 30, 40, 50x. And literally, if you have that kind of returns, you have no incentive to come back the next day and sit on the same desk. There is no incentive. And then suddenly you become more geared up to go and raise money for your next project, hoping that you'll also get the 30, 40, 50x on it, right? And there are players who have done that. But at the same time, if you don't have the basic tenets of infrastructure, you have a infrastructure, you have a community who comes and trades on your platform. Today, you need to have a certain amount of human capital in order to attract the financial capital, right? Same thing here. So the more financial capital that is attracted needs more humans to actually manage it, right? And again, that cyclical nature is common, whether it's in Web3 or whether it's in traditional Web2. Same things.
Talking about making like a 50x and just, starting a token, how did you end up in crypto? Like what brought you here?
So I think what brought me here was I observed one thing very interesting was during the pandemic, I observed saw an interesting phenomenon where sports teams, and I watched this in India and a few other places where sports teams were playing in empty stadiums. So they did not have the spectators physically there because of COVID, but yet the communities were engaged around their specific sports teams. And I met then the management team. It was this company called BetSwap, BSGG, and they told me what they are doing. They said, look, the world's largest sports betting markets are the US, of course, India is quite large, the Middle East is quite large, Asia, of course, Africa. And the globalness of sports, this transcends through any religion, any culture. If you love football, you and I were just talking about the opening of the Olympics, how just being there, it's an experience, right? So when I heard about the fact that you could engage with the community building of so many people supporting their sports teams, some people would say it's gambling. I'm like, no, it's actually you're supporting your team and you've gone deep, whether it's, cricket, just name the actual sport here, cricket, soccer, tennis, football, basketball, you go on. You've seen the surgence of very large companies in the US, DraftKings, et cetera, who have done extremely well. But what I liked about this was the fact that there was a Web3 business, pretty global. It has taken them a bit of time. And I'm very happy, as I said, I met with the management team. And what I saw was a chance to communicate and work with a global community who was interested in sports. And then I look into that. Sports leads to media. Media is not only content creation or films, TV, it's also music, engagement. One of my partners in my media business is Dr. Deepak Chopra. He talks about the metaverse for good, talks about the fact that you can actually employ technology and you can actually use it as a force for good in a world where there's a high level of anxiety caused by social media. And today you're finding an interesting phenomenon happen where people are now going out to buy devices that don't have any social media tools on them. They want to use it as a phone and WhatsApp, and that's it. So you're actually seeing a lot of basics, going back to the basics now. So what I saw was an interesting way that crypto brings communities together. And yes, in any community, you have the good, bad, and the ugly, normal part of life. You have that in Web 2 as well. It's not only exclusive to Web 3. The thing is, in Web 3, you don't know them, okay? In Web 2, you know who they are, all right? So there's a learning curve out there, right? And I come from the experience economy. So what I saw was the fact that I could see certain good Web3 players. I take Animoca brands. I like what they have done. I've just joined the Universal Health Token, which is an interesting view on a token that it's not rewarding you for nothing. As you improve your health score, which means there's an ESG component to this, all right? They're backed by a company in India called Goki, which is probably one of the most incredible digital integrative health platforms. A phenomenal Web 2 business, digital platform, but you now have a Goki score, which impacts your life and health insurance. So think about the impact of using data, using a Web 2 platform, but with a Web 3 component to it. So what I like is the fact the integration element of this. And I think what is also surprising, all the major studios in the world, whether it's the Disneys, the Paramount, they're scared of Web 3 because they're centralized. They don't want to lose the power. They want to keep as much of the profits as they can. And I was having a conversation today with someone. They're the fat cats in the room. They will allow the content creator to get some crumbs, and they'll allow the client to get some crumbs, but they want to eat it all, right? Web3 allows you a level of transparency in your economic model. You can actually you can share a lot more with the content creator since everything is on the blockchain. So I like the fact that you could document certain things. And if you think thoughtfully about it, you can actually build a huge business on Web3 with the blockchain platform because it's actually more transparent. So that's what attracted me in a nutshell.
I like the example of that, like a fat cat, because we know what happened with this AI and the moment they jumped. And the reason I saw this tweet, the lady tweets that, I want AI to cook my food and clean my home that I can go do art, not the other way around.
I thought that was fantastic. It's true though, right? Today, if I'm a creative person, and you and I said this earlier, I don't mind going to a concert to watch. I mean, interesting thing the other day. My son, who's 25, was invited to watch the Rolling Stones concert in New York recently. And he said, Dad, I saw this 80-year-old guy, Mick Jagger, with so much energy. That's pretty cool, right? You have an 80-year-old guy on stage who's lighting up the entire room, still at the age of, 80. And he went there for the experience. Now, today, if an AI avatar is singing an AI-created song, would you go to watch it in a concert? What are you going to watch? A screen? Not going to happen, right? So this all goes back to the human connection behind it. And what that lady who posted that makes a lot of sense. I want the AI tool to clean my house, cook my food, drive my car, but the creativity rests with us. And I say this, the creativity of Steve Jobs, the creativity of Henry Ford. Look at the icons, Rockefeller. I mean, you just go through history, go through every country in the world. It's all humans. The humans have left the legacy, not the AI. So that's what I keep thinking about.
That is definitely, because also I was thinking, like, when we talk about democratization and how like blockchain can impact, I believe it was during the pandemic, there was this authors that couldn't publish the book, and they actually did like it pieces by pieces, and like people helped them to fulfill their dream, and they became the stakeholders. And I think that's great. Like, imagine if you could do that of course, I think more we talk about it, the more dangerous it sounds. Like, if the actors in a film or film crew gets more shares rather than just like a last half a second of their name crossing the screen or any other business.
Look, there is a level of, I've talked about it, one of our companies is Beacon Media, right? And Beacon Media is asset light, IP heavy. So we work with great independent content creators, one of them being Dr. Deepak Chopra. I'm the chairman of that company. And what we do there is we are partnering with phenomenal producers and directors with a great track record. And we literally look at the communities that we look at the following around the content. So if a creative has a huge community in a certain country, we create the content for that, right? What's interesting is that we're marrying the two. And I always say this, I will use AI to produce the content, not to create it. That creativity must come from a human being. That creativity is what keeps us here, right? Of course, with today's AI tools, can I go to ChatGPT or any other tool out there and say, can you please write me the next episode for something? I'm sure it will, but it's going to gather the information that's already out there in the public domain, and it's going to give me what it gathers from everybody else. So effectively, then I become a salad of everybody else's thoughts that go out there, right? That creativity spark is gone. So I now think to myself, the independent content creators, the independent movie makers, the future is with them. Because today, I met with somebody today who said a very interesting thing to me. He said, content is king, but distribution is King Kong. He was right. Very smart guy I met today. Andy, a very sharp person. And he really made me think about this, because at the end of the day, the old equation was content plus distribution equals money. Today, it's content plus distribution plus experience that will give you monetization. So if you think about it, if you're a studio, if you're in the media space, if you're not providing these three things, there's no monetization. And that's what I think people have to think about.
And why, like, we started the conversation, we talked about monetization and importance of making money.
Sure.
And we are in the middle of the conversation still about the monetization and making money. Do you think that these ventures and tokens that we are selling and buying and investing, is it actual a monetization? Because most of the time I see that projects will issue a token.
Yeah.
People will buy and sell it, but never use it for the actual reason of that token that is designated, whether it is to exchange a content and so on, or like, I don't know, whatsoever the reason that you earn and you should be spending in that tokenomics chart that it never does. It's 90% is just people trading it as a...
So I think there is a level of, again, there's two reasons, right? One is you'll have the fundamental stalwarts in any community who will stick, who will buy and just hold on for dear life, right? But you have a certain amount of people who trade. And at the same time, go to the retail market. Look at any other stock exchange. There's a level of institutional investors, there's a level of strategic investors, and you have a level of retail investors. Day trade, in and out. So if you think about it, it's exactly the same thing, right? There are people who are able to access stock or tokens, in this case, at a certain price. The value creation thesis kicks in. They want to monetize. They go to an exchange. They sell it on the exchange. Their buy is on the exchange. They understand the marketing strategy. They put in the social media influence. It's like any other product or project, right? The narrative counts. Who you're associated with will give you a validation, so to speak. And sometimes who you're associated with will also give you the wrong validation, right? So you're judged by the company you keep. And I think many of them in the Web3 space, if I take a step back, there was a lot of hype, a lot of money was raised without thinking it through, without thinking, okay, what is the end game? And you said this correctly. Were we raising money to build the project, or raising the money so that 10% will be used to build the project and 90% will just be monetized and create a trading environment? It's a combination, always.
And while we talk about like a very much, investor kind of a perspective, how do you, because you also invest yourself and
Sure.
you mainly do like a very early stage,
Yeah.
You work with a lot of founders, like how do you scout a project? Like what is a promising project to you?
So I have a simple view on the world. Maybe it's a little bit, I take a bird's eye view as following. We're 8.5 billion people today, globally. You have 6 basic human needs: energy, food, water, infrastructure, healthcare, and education. I leave alcohol and sex to the side. These are 6 which I'm willing to put money in, right? So I try and see what part of these 6 basic human needs that project touches. And that's what drives me first to understand it. So if it's in the healthcare space, I give you a simple example. So I'm an investor in a company called MindMikes. The number 1 killer in the world is cardiovascular disease, heart disease. They have a simple theory. They want to go from number 1 to number 5. That's pretty cool. They built a unique proprietary algorithm that goes into any headsets or anything with a 99.7% accuracy, gives you reading on your heart. The use cases, I'll give you a simple example. 10.5 million people fly on a plane every day. Imagine if you're listening to the headphones on the plane, and I can tell you that passenger on this flight, seat number so-and-so, is about to have a heart attack. That's pretty cool. How many people take Zoom calls or Teams calls and use their headsets? Imagine if you could tell the level of stress sitting with your team members, who, as you said today, everyone is virtual, right? So you also understand the value of bringing it in. And this is what drives me. I look at the fact that I'm very excited about the health tech space. There's a recent company that we're currently looking at called Linus Bio. Incredible company. They're close to FDA approval. They can, by analyzing a strand of hair from a newborn, tell you whether that child is predisposed for autism or ALS. That's pretty cool. So when you have something like this, that's cool. You're coming to me with a project that has no utility, and I think today we can It comes with age. I always joke and I introduce myself to my team that I bring no hair/gray hair, which is fine. I'm not into the pump and dump. That's not my style. It's how do we build something? And I try to look for the Web3 angle in whatever we are doing. That to me is very important because I want to be able to transcend both the communities and bring them in place.
That's amazing. And I think that's very important to find the projects that you are passionately connected with the ethos, understanding why are you investing, what are you trying to achieve, rather than just, oh, I'm here because I heard someone told that this token is going to do 5x.
No. And look, today, Bitcoin, right? Bitcoin's just crossed 70,000. Do I see a future in it? Absolutely. Because I'll tell you why. Bitcoin mining is going to be probably the biggest supporter of the global excess energy sector. There's a significant amount of excess energy capacity coming globally. Every single country in the world. And one thing very clear, 25% of the US power needs by 2030 is going to be AI and compute. There's not enough distribution right now. So what's going to happen is if you take a step back, the only buyer of excess intermittent energy is Bitcoin mining. So Marathon Digital Holdings, unique proposition. And what did I say? My 6 basic human needs. Energy was the first one, right? Marathon is in the energy business. So Bitcoin mining is not only Bitcoin mining. It's providing an energy solution for countries. It's part of everyone's national development agenda. So you need to support Bitcoin mining because they come in, provide grid balancing. They can give back to the energy grid at a time when the grid needs more capacity. Like, for example, here in the Middle East, we have a facility in Abu Dhabi. Our partners are 02 with ADQ. What do? We balance the load. At a time when there is peak capacity in the summer, we curtail. We switch off we can be offline in 5 to 10 minutes. And we go online when we need to. Think about which other industry in the world. They will need 6 months or 9 months to plan the curtailment to balance the grid. So Bitcoin mining actually has some great uses in the global energy sector.
Yeah, and I think it's very important because I know that like there's Latin American countries, nations that do the same because of the excess hydropower, and they don't know what to do with it because unfortunately there isn't batteries like that big that could store energy.
Not yet.
Therefore, I think it's a very creative approach where you can just tell, okay, it's anyway excess energy. You don't know what to do with it.
Correct.
Let's turn it into valuable something. Hold it
And I give you something else as well, right? The oil and gas business, especially the energy industry, as you extract more resources out of the ground, some countries of the world still flare a lot of gas. A lot of associated gases come out of the ground. That's being flared. You can capture that and mine Bitcoin. So everything I look at is looking at the Web 2 and the Web 3 angle. And that's what I think excites me. As long as it fits one of these 6 basic human needs, that's how I think about it.
Yeah, that's crazy. I was also reading the other day that during the war, because Russia couldn't sell that much gas, they were just literally burning. And CO2, no any benefit. It's just like, I don't know what to do with this energy. Correct. And you can't just close your, gas wells and oil wells and waste. And there's no way to do anything with it.
If you take a step back, right? So there's a lot of renewable power coming online in Saudi Arabia, Korea, India, Turkey, a lot of places around the world, Central South America, Kenya. The grid is not ready to absorb that. So what is interesting is up until the time the grid is ready, you need someone who can plug that. That's where Bitcoin mining comes in. We actually provide an energy solution. And if you think about it that way, it's wow.
Yeah, there are also
it makes a lot of sense.
Other very creative projects. I recently we listed a project on Bitget, a dipping project that helps the individuals to sell to the grid and buy from the grid, and because that thing is very hard to do, like in a manual traditional analog version on chain, it's very easy. You can put the prices, calculations, everyone knows who owns who what. That's so crazy. Like that's crazy that how blockchain, when you go deep to the technology, can be actually applied even like without tokenization and all these like hypey words. And recently we were talking with some very high level like a VPs at Unilever, and I was fascinated how they use blockchain technology to trace their palm oil production.
Absolutely. It's about transparency today, right? You want to be able to trace the feedstock, you want to be able to trace the journey and the end user. And I think today's world, there is a lot of transparency out there. And what's interesting is I always joke and say the lack of transparency is actually with fiat currency. There is no transparency there because you don't know where it came from. You have some idea, but there's the blockchain gives you a ledger for life. So you know what's going on there, right?
No, cash is definitely one of the like most anonymous things.
100%.
And recently, like there was someone talking about, you know, DGen and the centralized world and being anonymous, and it's like cash because you don't know who gave who.
Of course. No, 100%. 100%.
It was an amazing chat today, and we talked about the importance of like ethos and being connected to the things that really matter, and of course transparency. And my guest was Manoj. Thank you for coming.
Thank you for the gift of your time. Thank you very much.
I was your host, Vugar Usi.